Hi everyone. Hope you are well. It's Friday. It's 2:53 here, a few minutes late uh, than scheduled. I've had a few technical issues this morning, but I think we're live and good. And we got PCE data, PCE Price Index. Remember, it's the most significant piece of inflation data. As far as the Fed members are concerned, obviously the meeting next week looks like 88% last time I looked yesterday chance of a 25 basis point cut next week. Of more interest, really, is obviously Mirren's views. Obviously, lots of gossip this week that Kevin Hassett is going to be the next Fed chair. It was expected. The rumor mill was that Trump was going to announce something on the second or the third. That hasn't happened. He suggested it's going to happen into the new year. So why didn't he make an announcement? There made some lots of positive side comments when Hassett was in the room when they were in their cabinet meeting. Obviously, politics can be a very messy business, but that looks like that's as nailed on as a 25 basis point cut is next week. So I'm starting with gold this morning or now. We have obviously anything you want to have a look at. Let me know. Put it in the chat box, and we'll check it out. But gold's had a relatively good week. We're at 4,245. So highs for the week, if you like. Here's Friday's candle. So 4,220 is where we were holding for the week, and certainly 4,200 has been key. So another positive, a relatively quiet week compared to last week. If you look at the weekly chart, we had a big candle last week, and this is our ninth week here. See, that's the 4,000 level. It's our ninth consecutive week now above the 4,000 handle. All-time highs here in the middle of October took us to, as I'm sure you all know, 4,380 zone and 4,242 as we speak at the moment. So gold bid again over the last few weeks. Certainly a big strong week last week, and we're up this week, although marginally so compared to previous weeks. So we'll see how that goes, but it's still monitoring. And here, just looking at the daily Bollinger Bands, we've been in the upper half of the Bollinger Band there since the 10th of November, and here we are, the 5th of December. So gold remains very much on the up, and all the fundamental factors still support this gold price. Some significant buying from central banks, some significant buying from governments. Obviously, the debt crisis, global debt crisis, just keeps rolling on. It's not like our personal household debt, but government debt has to be kicked down the road, but it needs to be paid for eventually. But that's perhaps for another generation or generations, unfortunately. But anyway, gold rallies 4241 as we trade at the moment. If we look at the calendar for today, here's our new economic calendar on our website here. Relatively quiet Friday. Main news has been the Canadian jobs data that came in earlier. It was much better than expected. It came in at 53.6. You can see here. Excuse me. I was thinking cold all week. Absolutely terrible. But we plod on, don't we? So Canadian jobs, big surprise last month at 66,000. We've had another big surprise earlier today. It's coming at 53. It's not actually on this for some reason. I don't know why it's not visible. Why can't I see the actual live event? I'm going to set up on this calendar. I'll have to speak to the techies. I think there must be something. But anyway, these are all in. As you can see, these are the times that came in my time. So 3:00 my time, 3 minutes before we get this key PCE number, the core PCE number in the moment. Anyway, back to Canada. So it was expected to show a decline. It's actually come in at plus 53.6 thousand, and a big surprise is that the unemployment rate has dropped from 6.9% to 6.5%. It wasn't expected to spike up, so that's actually really positive data around the jobs robustness of the Canadian jobs market, which is a big surprise for the certainly says central bank in Canada and markets. So if we look at the movement, we had some positions last night, which I didn't share with you, but CAD yen, for instance, we were short, which has been stopped out. Pound CAD actually hit target before it's reversed. CAD Swissy hit target and then it's reversed. If we look at the CAD crosses um, on that surprise, better. Actually use dollar CAD as an example of the surprise strength of the jobs market. So dollar continuing to unwind against most currencies. It was holding on against the CAD, but moved down here again today. So we look at the hourly chart, big move down there on that positive jobs numbers across all the CAD pairs. Pound CAD, which we were long on earlier and actually hit target this morning, and then it's reversed quite aggressively. But certainly CAD very much on the front foot. CAD yen here again. We were short last night. I think was it short? Yeah, we were short last night and got stopped out earlier this morning. But what a rally that's moved! So here this morning we were down at 110.75, and we're all the way up here at 111.90 for CAD yen. Yen remains very weak, but big moves for the Canadian loonie on that very strong jobs numbers that we've just seen. I say the data for the core PCE is just running across now. If we just bring you the calendar back up, unfortunately, now I must fix this. This is the data we're waiting for now at 3 o'clock. The Michigan University of Michigan data as well. University of Michigan data as well, the consumer sentiment, and the hasn't actually got the inflation data. I think that's only high impact on. But see what this data looks like in a minute. So actually, I could bring in. Could I bring in the calendar with that? Yeah. So here we got the US data's just dropped as well here. So core PCE is coming as expected, in line with expectations, to 0.2 of 1% for the month. However, University of Michigan consumer sentiment has actually ticked back up, which is quite a positive return as well. 53.3, so that's positive. Last month's also been revised. I remember these are sentiment indicators. This isn't a bit hard data. This is a survey that the business school in Chicago do. And continuing weighing of inflation expectations, 4.1%, down from 4.5%. And last month, that's been revised back down to 4.5 from 4.7%. So overall, that's again, that's good data for the US as markets as well. Core PCE. Let me just have a look at I'm not sure it shows the details like it does on our kind. The details of the PCE is in here. So 2.9% is probably what has been reported. Let me just check how that's coming across. Um, du- 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 du. My so yeah, so consumer sentiment, I mean, remarkably robust, the US consumer, hasn't he? Haven't they? I should say, 53.3. So obviously it's weak compared to where it's been, but it's come back um, here on this December reading. It's been moving down all year basically. Obviously, the start of the year, we were all the way up here, well over 70 and 80 at the end of the year. Expectations were very high on um, the Trump presidency. Then we had the worries in May and April over the tariffs, and we've come back, and we dipped last month, but we're back up again this month. So consumer sentiment looking relatively positive there for out of the University of Michigan. So let's have a look how that's moved the markets. Just moved our markets. So let's just come back. So CAD continuing to rally on that strong data. So we start with gold. Let's have a look at the US dollar today. It's been under pressure all week. Let's run through the majors in order. So the Swissy here, sort of sideways action so far today, but again, bid from the buyers down here to 80 earlier yesterday. Oh, we went even lower on Wednesday to 879.90, but certainly more buyers here, and dollars come back, and we're at 80.37, 80.40. This seems to be a bit of a resistance area. You can see why, because it's a support area from back here earlier in the week as well. If you look at the daily time frame though for the Swiss franc, it continues to chop sideways, having had a really strong run against the dollar. Dollar's coming back, but it just can't break out. So this range continues to rattle through the dot 80 area, or pivot around the dot 80 area. So a break away from that, it could be quite significant. But we, as I say, as we know, we've been talking about this all year, haven't we? A big move down for the dollar against the Swiss franc. So the Swiss franc being right old bid from over 91, 92 zones earlier in the year, all the way down to 80. So we got that low at 78 here in September, I think it was. Yeah, September. So we continue to pivot through dot 80 with both central banks in focus on that. Obviously, the tariffs, 39% tariffs. There's been some amelioration of some of the high-end luxury goods that are coming out of Switzerland into the United States, but that's hit relations, obviously. But as far as the currency forex is concerned, dot 80 continues to pivot. So trade that range basically. But when this breaks, it could be quite a significant leg lower or potentially recovery for the dollar. But all expectations going into 2026 are a weaker dollar. But we shall see. Just because that's what everybody's thinking doesn't mean that's what's going to happen. But dot 80 is key for Swiss franc traders. Dollar yen back to 155. We got as high as 157 earlier last week, when there was some expectations of continuing weakening of the yen, and dollar yen would have got us to 160. It didn't happen, and we've tightened up a wee bit. Yen's come back a wee bit, but we are now back to 155. So yen remains weak under pressure. Some action from Udea yesterday, and got these fellow governors not taking on, but no, disagreeing with the prime minister. She wanted, not the announced stimulus package in Japan, and she didn't want hikes in interest rates. The technicals and the technicians at the central bank in Japan are looking to actually start to raise rates. So there we've had this decline from. I mean, it's not significant. We've gone from 157.70 to this 155 zone, and here on an end of day basis, we're sort of playing with the 20-day moving average. But that's been a strong rally ever since Takamichi came in as the new prime minister. So that really hasn't. You could argue that's broken gradually, rather than a big fall off the cliff. But we are still a weak yen against all its major competitors. So dollar yen 155 key pivot. CAD we just had a look at 138.80. Big comeback for the CAD this week and beginning last week as we went under 140. And so it's been a good start to December for the loonie. Had been quite weak, but again, we're into a key sort of area here at 38.80, 138.80. So there's a range there you can see. So next level here is through there. It takes us to 138 itself, and then the low here at 137.25. So that's the next two legs to the downside. Looks like this highs, lower, high lows has been breached. So we are through here. We've got a now new lower low here. So we've got a new low here at 138.80 for the first time since 24th of September there on an end of day basis. So certainly this leg up, this double top here at 141 has given up, and we've moved down and very much in the lower half of the Bollinger Band. The Bollinger Band starting to move down. You see that continue. See this sort of sideways action there, and then we've got this expansion here of the Bollinger Bands. We've got a squeeze yesterday, which is no, actually no, it came down from the. No, it wasn't a squeeze from the bottom, but big move down today. So it'll be interesting to see where this one finishes today. Stochastics moving into an oversold zone here, and then it's immediate move, but down to this 138.80 area. Next level, this 138, and then that these end of day lows here. This double bottom we got there at 137.25 on a daily basis for the CAD. Euro 116.54. So across the board, you see this weakness in the dollar this week. Big up day on Wednesday for the euro when we went to 16.75. We had tested again yesterday, come back down a negative day yesterday, but we're still in the, I say, very much in the upper half of the Bollinger Band and tending to trek high. There's 116, there's 115. So we're out of that range. 116.50 is the key support area. Can we hold it? Look forward into next week if we can move forward from there. We'll see. Looking at still got a bit of legs on that move up there on the stochastics, pushing a bit higher on the Bollinger Band potentially, but I'll be looking to hold 116.50 as we go into next week and see how we finish today on that. Aussie 66.43, so we're back under 66.50, but a strong run continues for the Australian dollar. So 65 was our key pivot area, through 66 now, and we're now heading to 66.50. The next upside resistance is there at 66.82, so much closer to that than our .65 area. So big strong run for the Australian dollar against the yen, and against the dollar as well in particular. So personal income spending for September 0.4 of 1% compared to 0.3 of 1%. Details of that PCE data come through as well now. So dollar weakening on this, as we can see here. So let's just go back to the euro for our 5-minute time frame on our weekly assess. So as the data coming out here, we moved. It was moving down a bit, but euros come back. So weaker dollar following the PCE data, even though it was better than expected. Sterling 133.45 today. We moved. So it's 5 minutes. We've continued to shift sideways. Cable rate very flat. 20-day moving average. It's now for nerds. That's at 133.40. So consolidation at this high level. Bit of a squeeze here. Hasn't that's suggesting we've moved down a bit. So perhaps some counteracting moves. So I'm waiting for that to break, basically. So that's the range I'm looking for. A break to that, take that one next level higher. But obviously we've rallied significantly this month, up from 132 to 133.50 zone, and as high as 133.85 on an intraday basis there on the 4th of December. So we're up, consolidating here around at the moment. And again, we're going to take this up to the daily time frame. The big break and hold of 132 was key. 132.50 has been breached, and that huge uptick we had on Wednesday, taking us to where we are now, and you can see that on an end of day basis, a key area, key pivot area here. So low here, low there, not play there, but there's resistance to the upside as this leg was developing where we are now. So we need to break above this closing high on Wednesday, where we are literally where we are now, 133.50. So still positive sterling dollar. And finally, the Kiwi 57.88. So a bit like the Aussie, but not as strong, but certainly moving in the right direction, away from the 56 low we found towards the end of November, and moving higher. Also, and again, interesting. That's technically it's broken up this range there, and we're above there. So that'd be an interesting where that finishes tonight. Above that little resistance we had here on the at the end of October. See that was at 57.75. and we're currently trading at 57.8. It's only 5 pips, but if we push and finish at this, the 57.90 area, or we actually go and test .58 itself on an end of day basis, that will be of significant interest for the Kiwi. So Kiwi up, having had a really really poor year against the dollar, contrary to many of the other currencies. It's coming back quite well here as we turn out the year. I'll look to year end. So there we go. Stock markets. More that's US funds. We were relatively flat yesterday. We were completely flat. 7 points on the S&P. 6857. The cash close. Our derivative here is at 6892. So the market. So again, it's been a relative quiet week. The shock of Monday, as that was exaggerated here in the S&P, but a big down day, a relatively big down day on Monday. Looked like we could have had a possibly engulfing candle of Friday and Thursday's action from last week. It didn't happen. We sort of bought our way back very gradually Tuesday, Wednesday, Thursday, what we're doing Thursday, and a much more positive day today. 6890 has been breached so far. So obviously that previous intraday spike, which took us to 691.8 is or 915. Sorry, is looking relatively interesting. So we can see the fib level, the 1.61. The 1.618 fib extension, 161 fib level, if you like, of this leg. As we move down, a retracement of that takes us to 7,174. So 7,000 looking vulnerable in the Santa rally potentially, but obviously we've still got 3 weeks of December to go. The first week coming to close. So S&P bid, and there's that next upside target, 7,171, 7,100. But again, we see here a big stretch here on the daily time frame, and as far as stochastic is concerned, but we have pushed these higher. The Nasdaq 25,800. So the big support we found at 24,000 has played out, and we continue to move higher. This week, there's Friday and Mondays wasn't as dramatic for the Nasdaq as the others, but came back well Tuesday, Wednesday, down day yesterday, but again another positive day today. There's some 5-minute trades last night, wasn't it? There's nothing going on in the close. Those of you that were with me last night, I don't know there's many people there last night, but there was nothing going on trying to trade the US close. We did have a just before we did close out, didn't actually take any positions, but the Bitcoin 5-minute did work out. The one we set up. So watch the video from last night for the details. But anyway, stocks continue to move higher, and it's through that through the 78.6 fib as well today. So 25 ends. So stocks looking quite perky today at the moment. So we are higher. Lifted by the weaker dollar and those consumer spending and the PCE data as well. To lift stocks. Sorry, let's just only got the daily on there. If we look at the hourly chart for Nasdaq as an example, big spike there on the data, and we've got 5 minutes. We've been rallying, so again trading this on a cross here. Actually, you're right on that. You wouldn't have got that one. You got that one there, so you'd have been long here. Stop loss down here, and off we go. Target 1, target 2. Then it retraces, but it's still running, isn't it? So you could have perhaps re-entered as we've moved here. But this is now looking to go short, actually. So we'll see if this happens. But obviously, the main data's out, and it's that University of Michigan coming in at 53.3 compared to 52, and it's lifted sentiment into the weekend start. So not massive moves. The cash markets, I'm just seeing here on my Reuters feed, Dow's up about 200 points, less than 1%. So not great. The 10-year yield has moved higher, 11.411. I think that's the highest of the week for the 10-year. Um, we'll see where we finish the day, but positive stock markets currently uh, on the back of the PCE data and the sentiment and inflation expectations from the University of Michigan. Um, S&P we had a look at, and that's like we just had a look at the Dow. 48,000 has been retaken today, so strong. Sorry, there's, and there's Friday. Sorry, there's Monday's big down day. Recovered very significant Wednesday for the Dow. Down day yesterday, and then up again today. So again, similar to the data with these daily and 4-hour trend line holding yesterday and again this morning, and we're at 48,051 at the moment. It's yesterday's high, wasn't it? That's why that line's in that from last night. Nikkei 50,760. We were short that. We closed that out yesterday, just around here. It was, wasn't it? About 50,000. I think it was about 300. However, again, I didn't share it with you, but my other end of day strategy took a long position last night on the DAX and the Dow. Sorry, the DAX and the Nikkei. So that's in the money. Again, I might be closing it out, but I can't stick it up on our board because I didn't tell you about it at the time. I'm going to pretend I took them when. Well, I did take them, but I'm not. I can't say I'm just because of one. I'll go through the ones that did. Some of them had some significant losers. But again, yeah, the DAX would have hit target one, and stop loss would now be up to our entry from last night here. So that was a, you know, I did talk about that at the video yesterday, but and I did actually take it later on in the evening, but I didn't share it with you on our Discord group, so it doesn't go down. So at the moment, we're actually down for the week. We've only had I've only shared with you 3 trades, and I've all lost this week. So you know that happens. Oh no, sorry, not all lost. No, that's not quite correct. But we're still out of the money. I'm thinking pip wise, points and pips wise. I said the Nikkei. I think it was so that's 50. It was probably 215 points. It was, so that was not as bad as I thought it was because we're going in 49.85. We got out at 5,200 something it was, but that was 90. The oil positions are actually in the money. I didn't show you that. So that's not what's that 90 to 300. So we're probably about down 150 for the week at the moment. I'm not going to post any more now, but there we go. We got us cracking 2025. And just before I go, let's do the energies, the WTI. So 60's been recovered for US oil, WTI. We were long here on Monday night, out of the money significantly on Tuesday. Nearly closed it actually manually during the day. Did the stop loss was within a smidge. Was tested a few times on Tuesday and Wednesday before Wednesday closed positively. Thursday we were back in the money, and we got to that first target zone, as I'm going to call it, today over $60 for WTI. Brent similar move. 64 was the sort of zone area for Brent, having got in at whatever it was, 63, 68. So it's a few pips in the point, but we're still holding that. It's could easily reverse as well, quite simply, but we are moving up. So my stop loss is still there. I'm going to write that up. Hold that for the weekend into next week for oil. It's nothing I'm too excited about, to be absolutely honest. As you can see here, the daily time frame is very much sideways action. It's just my system triggered, so I thought I'd had an oil trade for ages, so I cut my system, and away we go. So we were eventually in the money. It's taken a whole week to make a few pips on the oil market, but that's what happens when you're not trading. I mean, it's a very subdued market, the oil market. One that certainly isn't subdued is our our friend Billy Bitcoin, 90,900. We looked like we were going to hold 92,000 for the week yesterday. It's given up. It turned down yesterday as we got to 94,000 on Wednesday and Thursday. It looked like we were holding 92, and we're back to 91 now as I speak. So burst over the well, not burst, the breach of the 20-day moving average into the upper half of the Bollinger Band looks quite weak like it was last time. So this, not getting too excited about this. Interesting, we've had a cross here yesterday on the stochastic still before we got to the overbought area. So it's a weak rally, so we could still see some movement to the downside for Bitcoin over the weekend trading. So 100,000 still looking a long way away. First target was the top of the Bollinger Band at 95,000. Looked like we were going to perhaps get on Wednesday. It turned down yesterday, but it still looked like 92 might hold. That hasn't happened. We're at 91,000 now. So we're looking. It's rounding top there. We've got candlestick pattern similar to the one here where we burst over the 20. 1, 2, 3, 4 candles. 1, 2, 3, 4 candles. We've got a pivot turn potentially there, and then we went down to test the key 107 level here. We're going down to test the key 85 level again. So yeah, that's not looking great for Bitcoin on an end of day basis as we move into the weekend. Let's have a look. If anybody, there's nobody here to ask me any questions. I think no. So there we go. Let's have a quick review of the data. Then the PCE data. Well, has come in line with expectations. I would argue. It wasn't um, anything to shake the markets. Um, kind of remember it is. And we have 0.21% for the month. Probably the highlight that's moved things has been the Michigan sentiment. But again, it's a sentiment indicator. It's not really hard data, whereas core PCE is a real hard nosed anymore. Yeah, yeah. So personal income was better as well, as we said. Spending was in line at 0.3 of 1%. Personal income was up 0.4 of 1% from 0.3 as expectations. So that's in line with expectations. Inflation was weaker. Personal spending, yes. So yeah, so overall it's relatively positive, which is why stocks are higher. Dollar's weaker, and let's just finish the week with everyone's favourite asset, which we started the day with, which is gold. We have bid again 4 to 46 on a good day from a flat day yesterday and a down day on Tuesday and Wednesday. So we're back finishing the week positively um, for gold, and say next upside target here really is holding and breaching 4,250, 4,260 thereafter. So still another $5 before we get to that one. So good day for gold. Also, we had these all-time highs on it's our silver market, and we are again at 58.80. So new all-time highs getting pushed by the silver market. Um, um, not only outperforming gold recently, but semi-precious, and also industrial metal having a really, really good run and continue to consolidate up here at these all-time highs. And new intraday all-time highs getting tested again today at 58.80 for silver. With still some legs in that one. Not got the daily. There we are. It's another big, strong day yesterday. Sorry, today having gone back under the 58 handle yesterday, so silver also bouncing back today on the weaker dollar and improvement in the yield position. Next week, if we, I don't know if my calendar's going to work here for this news analysis. No, where's my calendar gone? Um, I seem to have lost. Give me a second. Mm, I've lost my calendar. So let me just open my calendar again. Oh, hang on, there it is. There it is. There it is. There it is. Can I do next week? I'm used to this. Economic calendar. Um, I'll get to next week. Show 25. Next one. 100. No, no, I don't show all. No, no. So I need to get this sorted out. Is that just going to show me medium? I'm supposed to. Ah, dear. Yeah. Well. So next week, it's. I'm sure you're all aware. It's central bank week. Obviously, the Fed meet on Tuesday. Their announcement is incoming on Wednesday. 25 basis points is expected. Oops, get rid of that. Is expected. There we are. Let's get rid of that. Um, Tuesday, let's go back. Monday, relatively quiet. We'll do the trade the open probably and the opening trades on Tuesday. Tuesday is the RBA. No change from the RBA. On Tuesday, it's expected. Weekly ADP again on Wednesday. We've got the JOLTS numbers, which should be added to this weekly. Added this this dichotomy we've seen with the jobs numbers this week, and see what that gives us. Chinese inflation kicks off Wednesday. Wednesday is the Bank of Canada, but obviously more importantly the FOMC. 25 basis points expected. It's 89% last time I looked. On that, but really it'd be the press conference and how what Powell gets called with his expectation. It'll just flatly deny about any speculation about his replacement. But Swiss National Bank on Thursday as well. No change there. The guardians of negative interest rates. Again, see what they have to say. Will the weekly claims surprise like they did this week? 191,000, lowest for many years on the weekly claims on this yesterday. Also on Thursday is the Bank of England. Where's Bank of England gone? Bank of England as well on Thursday. And then the next week, I might have missed call. I think Bank of England might actually be next, the week after next, isn't it? With central bank week, obviously headed by the FOMC on Wednesday, but plenty of other data releases to get your teeth into, given the um, uh, vagrancies of the lockdown, the longest lockdown we've seen in US government history, and obviously that data is all going to start trickling out. The non-farm payroll data is obviously not going to be out before the Fed make their decision, their announcement on Wednesday, but it's really not going to change that. It's just how much argument there is, how much disparity there is, how much dissent there is with regards, we need to go harder. The inflation data is it's somewhat moribund, according to the president. That isn't quite the case we're seeing, but that PCE data today will back the doves on interest rate cuts. And whoever takes over from Powell, expectations are that we will have a significant move in interest rates in the US in 2026. But just because that's what's expected doesn't mean that's going to happen. We haven't really had the impact from the tariffs many bulls were suggesting. Perhaps Trump is right. And it'll be a surprise. But anyway, we shall see how it all pans out. So gold, silver over 58, 58.90, nearly 59. Gold trading has got back to that 52.50 level. So sterling, dollar continues to weaken by the looks of things as gold and silver are higher, and euro here 116.57. So the 5 minute chart. Strong recovery ahead of the data as we move down. So we're moving back up 116.65. So dollar remains weak. Gold's on bid. And stock markets are moving higher as well. So take care, everyone. I'll see you on Monday morning, all things being equal. If not, I may get called away for Monday, but I will let you know over the weekend if I'm around. I'm not got actually scheduled anything. I've got some personal things I may need to address on Monday. Get that confirmed for me later on today. So take care, everyone. Have a great weekend. Be good. Those of you out Christmas shopping, celebrating Christmas shopping, take it easy. Those of you who are doing it all on Black Friday weekend or whatever it is, Cyber Monday, congratulations, well done. Footfall is pretty heavy here in London, so wherever you are in the world, you're celebrating Christmas, out shopping, if you want to do it, all the best. Take care, be safe, and look after everyone and be happy. All right, take care.